Hey there. In this video, we're going to talk about a topic that's fun to talk about, but gasp, might be irrelevant. As you know, if you've been watching these videos over the past year or so, there's been a dramatic change of mindset for me. Again, I've gone over the reasons in other videos, and we can talk about that some other time, but I've totally changed my mind on a lot of things, right? Totally changed my mind. And for example, I don't buy high yield ETFs in my personal accounts to beat the market, right? Beating the market to me is irrelevant. I mean, that's a yikes moment, right? The name of my channel is Beating the Market. So what the heck am I talking about? Well, we'll get to that. But the bottom line is most people still care, right? Even though I make the statement, I don't care if it beats the market, most people still care. Why? Because we're so brainwashed. It still includes me, mostly. But we're so brainwashed into needing the chart to go up. We need it. That's all we've been told that matters. We've been told over and over again. And it's still extremely hard not to want it, right? You buy something, you want it to go up. Even if you've changed your mindset, it's hard to escape it. Now, it's the income that matters, at least to me, but everyone loves winning, quote unquote, because winning, again, we've been brainwashed into thinking that that means the chart goes up. Is that winning though? Again, another video, another time. And furthermore, if your portfolio goes up, if my portfolio goes up and I'm using a lot of margin, then that helps. Right? Because if the portfolio goes down too far, eventually they're going to get a margin call, which isn't a bad thing at all, but nonetheless, okay? So we're still going to talk about the topic, and we're going to find out if my couple of my portfolios beat the market. Again, these are real portfolios. Okay, think about it though. If we receive a boatload of income, super high yield, and our stock just stays flat, just stays flat, doesn't do anything. Again, we're not supposed to want that, but let's say it does. Won't we overall be quote unquote doing well? A lot of money coming in, right? It's not nothing. And if we're doing well and a lot of income's coming in, maybe we're doing better than the market. I mean, it stands to reason, right? Or if we receive a ton of income and our stock even goes down some, won't we still be doing well? Maybe better than the market. This is what this video is all about, and let's check it out. Now, I researched this stuff really almost since day one. I've been interested since TSLY, and all of the others started coming out. And that was one of the first ones back in late 2023. But it takes me a while. I'm a chicken. I'm not an early adopter, and I don't like to jump right in. Maybe you're the same. Anyway, I finally had enough. I'd seen enough. I'd researched enough. And in late September 2024, I bought CONY. Very small portfolio. Didn't go all in with six figures. No. I just wanted to see what it's all about. I couldn't argue against it anymore. It was just too obvious. So I got in. Now, wasn't a lot. Small little portfolio, and it was my first dip. And look when I bought it back then. First, we had a stock rise. Yay, best of both worlds. The stock is going crazy, and I'm getting paid. Wow, I can't get better than this. And then, of course, right? There it goes right into the toilet. Okay? So I started here. If you drew a line across, oh, I'm down. Not good, right? I mean, anyone on Reddit, any Peter Lynch acolyte, any big trader would just boo me off the stage and laugh right in my face, right? Now, let's go ahead and check my Schwab account, though, just for fun. Won't that be fun? Let's check the actual numbers. And here we go. I call this portfolio my tiny CONY. Isn't that quaint? And this is from Schwab. I didn't make this up, not doctored in any way. Rate of return. That's what we're trained to care about, right? It's all we care about. This is from May 31st, 2024. Why May 31st? Because that's when I opened the account. Why did I open the account? Because I was interested in doing something like this. But I didn't want the cash to sit idle, so I put it in a money market. It was doing great. Money market was like 5% almost, high fours. And look at me cranking out the profits. So that's why it was flat. Nothing was happening. There was not even all of the money. It was just some of the money in a money market while I waited. Finally, I took the plunge. You can see September here, and this is the end of September. And I made half of it in the money market and half of it in CONY. I didn't even go all in. Chick in. And then, oh, it went down. You saw that big climb, dip, and here we are. This is it. This is as of February 2025 we're talking. And the total return, rate of return, was 20%. That doesn't seem that bad, especially for something that's half CONY, half money market. Well, how does that compare? Tiny CONY versus the S&P 500. Tiny CONY in blue, S&P in orange. And look who's ahead. Now, it's not a million years of data. I get that. But it's from May to February 14th, 2025. And look, I didn't do anything in May, June, July, August, or even most of September. I did nothing. The S&P had all those months of head start. Look where we started. Look where the S&P was when I started. And it wasn't even full CONY, right? It was only half CONY. Look at that lead. Oops. Look what happened. S&P, the market, index funders, Mr. Money Mustache, Fire Movement. They all would have done 17.9. My half and half tiny little high yield does 20. Okay. Well, what about the NASDAQ? The NASDAQ, right? Again, the NASDAQ has months and months of head start. It's not timing the market. It's time in the market. Well, the NASDAQ had time in the market. And little CONY and, oh, look, dead even. All right, NASDAQ won by less, what, 0.14%? Dead even. With all those months. Look where we started again, right? Way ahead. If we tracked it from when we both got in, I wonder who'd win. So beat the S&P, beat the wild NASDAQ. And how about the Russell? Have you read these articles? It's small caps that are coming back. Small caps when the interest rate's lower. Small caps are back. Small caps have been underperforming. You want to make $1 million, right? The market's going to go sideways for the next decade, according to all the experts, Goldman Sachs and those types of experts, right? It's going to go sideways, but the Russell's going up. The Russell is where you need your money. And again, the head start, and CONY destroyed the Russell. 20% to 11.9. Okay? I'm not trying to do this. But guess what? That's victory, right? A half and half high yield portfolio just beat 2 of the 3 and tied the big dog, right? Now, it's not the only. I have 4 total portfolios. We're going to talk about 2 of them today. This one I call max margin. Now, after studying margin for months and months and months and months, I decided to go in to go as far as I could with margin in one of my accounts. It was more than the tiny CONY. Let's see, it was about three times more than the CONY. And I took it just with any free money I had, and I took the margin almost all the way to the edge, not quite to the edge. So we're talking about maybe 70, 80, 90%. I'd have to do the percentage, but I took it pretty far, as Larry would say, Larry David. And I used, well, how did I choose it? I only used the ones with low margin maintenance, right? So I could get the most bang for my buck. If it's high margin maintenance, when the market goes down, your portfolio immediately goes down. There's no buffer. But if you have low margin maintenance and the market goes down, you don't go down quite as much, right? It takes longer to get to a margin call. In other words, if you use low margin maintenance. That sounds confusing, and who cares? But anyway, this is the max margin portfolio, and it wasn't high yield. There's only one super high yield in there of all the big names. Why? Because they had high maintenance, and I wanted more bang for the buck. So this is really conservative, if you will, right? Really boring, not the high yield that like CONY at all. And this has only been since December, so it's only been a couple of months, right? Because that's when I opened this account. So since December 2024 to February 14, 2025, let's take a look. The max margin, again, I took it pretty far. Oh, it's killing the S&P. I know, it's not a long time. But we've seen a different portfolio kill the S&P. And now we're seeing a totally different high yield portfolio style early on destroy the S&P. But what about that NASDAQ? Well, NASDAQ stinks. It's negative since December, as you probably know. Oh, max margin high yield is not, right? It's doing just fine. I would show you the Russell, but the Russell stinks. So it wins. Trust me, okay? Now, what's in that portfolio? Well, I do have a small group of people that I like to share and bounce and do some education with and share some ideas with. So they get this portfolio. I'm not offering this for free at this time. Sorry if that's a tease. I did give you my CONY, and that's doing great, by the way. So anyway, but again, it's low margin maintenance, and it's pretty NAV friendly. Not that I care about that, but it is. Okay, so what's the bottom line? The tiny CONY portfolio has some new friends. As of early February, I think February 4th, 2025, it was just too much cash sitting around. CONY has been paying so well that I just needed to buy some other things and get some more income going. So Misty, NVIDI, that's N, not N, NVIDI, NYMAX in small sizes. They're not as big as CONY right now. I'm going to build them up. I'm going to take this tiny little account and try to make it much larger. Okay. So that was February 2025. So these really didn't contribute, right? It only was a few days of trading. So the reason it beat the market really had nothing to do with those. It really had everything to do with CONY. Now think about this. I'm doing it for income because it produces a ton of income that you can actually use. But let's say you didn't want income. You just didn't want an index fund. You just wanted to beat the market. Well, guess what? Apparently, high yield can beat the market. I mean, at least in the examples that I showed, right? And think about this. If you just held it and tried to beat the market and then decided 2, 3, 4 years from now, okay, I'm tired of beating the market. I want some money. Well, if you're in an index fund, now you got to withdraw funds and you have now the potential sequential risk, right? If you start pulling money in a downturn, you can go to zero. What's the percentage? I think it's like 19% in the latest study I read. 19% of failure, you start pulling money out. Gee, that's fun. Or with high yield, you've beaten the market, hopefully, fingers crossed, but now you can start pulling money out, which isn't fingers crossed. So you can try to beat the market for a while, and then when you don't want to beat the market anymore, guess what? You could have some money, which is pretty cool. All right, I'll be tracking these portfolios and many others. If you want to get in the DIP program, I'm running it for this year. I don't know if I'll run it past this year. So far, it's been great. So we'll see how that goes. And you can see the information in the description. So crazy updates. High yield beats the market. I'll be back next time with more. Bye for now.